This week in the first reading that you're going to do here in Unit 1, it is entitled The Demand for Auditing and Other Assurance Services. It says it in the second sentence that audits are required by the Securities and Exchange Commission, the SEC, our #1 watchdog in the accounting and audit world. We learn on this in the next sentence that in 1934 there was a Securities Act that was passed that required that audits be done by CPAs. Because we had the Depression, we had people who did not have confidence in a company's corporate financial statements, so the SEC had to take action to restore confidence in the markets. And so they said that CPAs would have to indeed sign off on a financial audit for companies. In that same first paragraph, they go on to say that there was a single audit act passed in 1984, which requires that if an entity receives over $750 in federal funds, they too must be audited by a CPA. So there's going to be a great deal of audit work that has to be relegated to the CPA firms. And it says it right here on the first page of your reading for this class. Now, does that mean that we don't need you to work in audit? No. It means that we have to have a CPA firm do the audits of the financial statements and internal control. However, there's going to be a great deal of continuous type of auditing activities for other auditors or for the internal auditors to do as well. Plus, when I worked in public accounting auditing, what I did was work alongside the public company auditors and prepared schedules and things for them so as we could get a reduced fee. You are going to look to a CPA firm to sign off on those audits if you get an audit. And public companies have to, according to the second sentence and first paragraph, latter sentence, says if you receive federal funds, and there's a lot of smaller governmental agencies affected there, they too have to have an audit by a CPA. Going on in your reading in week 1, sometimes you won't get full-scale audits. There are other reports on financial statements as is written on page 3. They talk about compilations and reviews. Now, those are under different authoritative guidance called the SARS, issued in '79. SARS number 1 is Statements on Standards for Auditing and Review Services. And then it goes on even and covers the compilation, which is a lesser service. Neither of these are full-scale audits, but those might be less expensive and something that your organization might be interested in. They are some level of assurance on the financial statements. Going on in your material, you read about OCBOA. There's a lot of mnemonics in the accounting world. That's other comprehensive bases of accounting. There's cash basis financial statements or tax basis financial statements that might be something that your entity is interested in. After Sarbanes-Oxley Act of 2002 We have internal control over financial reporting. That's ICOFR. And anyway, there are precise requirements. There's Section 404 of SOX that requires that there be checks on the internal control of the organization, and you need a CPA to sign off on the fact that they do indeed have internal controls. There's different requirements for service organizations, which can include many healthcare organizations and hospitals that serve the public. There's SOC 1 and SOC 2 reports that have to be done. So there are requirements as a result of Sarbanes-Oxley. Going on, this chapter just gives you a good foundational basis on what you're going to need to do to work alongside your CPA and facilitate a good audit that's SOX compliant. That concludes Lecture 1.